Hello and welcome to Weekly Open. I'm Brian here with Don and Cred. Excited to be with everybody today. Before we get to the show, let me tell you about our partners over at FTX. Go to weeklyopen.com/FTX where you can trade today any market that your heart desires. They even got stocks and I think Forex. I saw some Forex charts on FTX last night as the pound was breaking down. You can do probably anything you want to do on FTX. Go to weeklyopen.com/FTX to check it out. And thanks to them for being our partners. weeklyopen.com/FTX. Let's get to the show. And of course, Don's got some big fat green lines on there for us already. Happy to see that. Cred, you're on the left. How you doing, bud?
I'm doing well. I was watching the pound get pounded, which is upsetting. I did watch my dad bottom ticket at breakfast, though, which was cool. I'm like,
Nice.
why can't this be a genetic trait that's passed down? You know, like I've discovered that it isn't, but it was still good to observe. Also, I mean, that gave me a sense of maybe some bullish hopium in that, you know, Don is on the show. Euro got crushed. That's bad for everyone. I'm on the show. GBP got crushed. That's not great either. But you're on the show as well, Ledger. And if dollar gets crushed, then we can actually get a bit of a break. So, yeah, we're 2/3 of the way there.
Yeah. Don, how's it going?
Good. I mean,
was that
I've seen the pound get crushed as well, but honestly, it doesn't really feel like anything special because the euro just gets fucked as much. Like everyone's talking about, like, oh, the pound is down like 3%. The euro did pretty much the same thing. So we're all getting wrecked. Then again, I don't really have that much money in euro, so I'm not really complaining too much.
Yeah. I mean, I'm in the dollar, but I'm getting wrecked too because I hold most of my net worth in Ponzi assets that are digital only.
That will come back. That's the important part.
Yeah. Could that have been a Forex-driven capitulation thing? There was talk of the Bank of England with a 200-point emergency hike. Could we be seeing some capitulation here?
I mean, everything that's not the dollar is looking like an emerging market currency at the moment. It's like a really scary time.
Yeah, I gotta move our boxes to the right just to watch these charts. So
this is horrendous. This is the euro, and then you obviously, which way around do you want to make it?
GBP USD or something, or Euro GBP if you want to compare.
Yeah, I mean, we could do it this way.
Yeesh.
It also looks beautiful.
Look at that on like the yearly or something. I know we're talking like crazy time frames, but it just went below everything. You know, there's nothing here, type of thing. I mean, what do we? You know, this looks
double
like
bottom.
Double bottom.
It's a double top to a double bottom. It's just.
I know TA is perfect, right?
But I think it's the strangeness of parity between the pound and the dollar to me. Like, that's not something I've ever known, you know?
No, neither.
It's like, well, I mean, we hit 2 something in the early 2000s, and kind of consistently the ratio you think is kind of 1 to 1.5. And so to be at roughly parity is just kind of mind-boggling.
Yeah.
I mean, it's scary for sure.
It's like in my head, it's at 1.5.
Yeah.
And because I mean that's where it's just always traded, and now it's like if you low 1.5 was surprising, and now it's like almost at 1, and I wouldn't be surprised if it did like go through 1, and that's just wild.
$1 magnet, parity magnet, right? The good old.
When I was in Italy, it was for a flip meetup, and I obnoxiously did not convert any dollars. I just brought dollars. And then I would
American.
I would give somebody dollars, just be like, yeah, you know, you like that, you know, you're fine. You're fine with this.
You're not welcome back in Europe, Ledger. That's it. Persona non grata from here onwards.
They were
but yeah, I mean,
they were trying to charge a 13% conversion fee. It's like 113 euros to dollars. I was like, come on, get out of here.
You got your trading view out being like, look at this.
Have you seen this chart?
Look at this candle. Look at it. I mean, the Bank of England is really hawkish. I mean, gilts were flying today, which is our kind of bonds. And the market seems to be pricing in like 5% plus interest rates next year, sort of by the end of next year, or some even March, depending on where you look. So it's a very hawkish outlook. And at the same time, you've got on the fiscal side, The Conservative government just going for the classic top rate of tax bracket cuts. And we all know that cutting taxes is technically inflationary, right? Or at least on the spectrum of inflationary to not. It's certainly on that side, because supposedly tax is supposed to destroy wealth and slow down the velocity of money, all that type of stuff. And if you give people, especially high spenders, more of their money, then that has an inflationary pressure. So it's just very frustrating to me personally when the monetary situation is so dire and that you have fiscal kind of fighting against it. You know, that kind of friction to me is very annoying and slows things down and makes it more difficult. And I get that it's sort of central bank independence versus the legislature and the political branch, so on and so forth. But like this global tightening cycle, high commodities, high inflation environment isn't the time to be, you know, butting heads between fiscal and monetary, but that's kind of what we're getting, not just in the UK, but in other places as well. So yeah, I guess it all went downhill after Lizzie, you know, Queen Elizabeth went, and we're just seeing more of that, I guess.
It's pretty bad, man.
You got any Dixie Cope, Ledger? You know, your big box is now in the periphery. So I was wondering if there's some sort of feel good moments with the dollar.
I was just running to other currencies in Dixie basket, and USD versus the Swiss franc. Franc or franc? How do you pronounce this, Don? Franc.
No,
I'm going with franc. I mean, this looks like a shitcoin ready to moon, doesn't it? Like that's a nice basing ready for breakout. So that's a small part of the basket, but
devs have a good announcement coming up.
Devs about to die.
Terrible.
So the if you look at the you were talking about yearly and quarterly type charts, Cred. I mean, this just 3-month consolidation breakout. We should have really seen it coming a little more, just from a. It's kind of ridiculous to talk about a pure technical component to this, but you cannot ignore this 120 level. What's interesting is it'll get to 120 and people instantly start talking about 150. On the other hand, these things should take time, and like just this morning move, that 200 basis point emergency talk, just that rumor of it after the pound puked last night. You could set up if you start seeing like a strong back from European markets. Like maybe you could see the dollar start to weaken, especially if the Fed starts to ease their narrative a bit. They don't even have to really reduce, go out and like stop raising rates. But what if they normalize 50% hikes while Europe starts trying to catch up a little more? Not good for any economy, but you could establish some capacity, I guess, for mean reversion. It's hard to think of anything that's going to make like the dollar just not strong generally, like just full on weaken without easing. But you could imagine some mean reversion scenarios, especially when everyone's like peak dollar bull now, right? Like sentiment wise, it can't be much worse than this. But the big green box is far away. We've been talking, we talked about that on the show so long. Like these were the green box was the resistance for our two prior big bull cycles, and now it's like twice the green box from the lows. Like it's you can't really belittle how big of a move this has been, and certainly if this corrects any, it should be really good for risk markets, which have gotten obliterated. Look at no matter what kind of risk market you look at, crypto and man, this is NASDAQ and stocks and stuff. Like looking at something like Shopify as an example.
As well. All the garbage from
literally went to zero. I love looking at Arrival.
Well, that's arrived.
Oh God.
This is one of my favorite kind of SPACs because this $10 was a floor. I don't know if y'all remember that. With the way these SPACs go to market, there's like a warrant at $10, and this one went above $30, and now it's 90 cents.
Should rebrand it to Departure because your money's gone.
Yeah, I mean down 97% on a stock. So this is just
crypto's too risky, right?
Yeah, this is an electric van startup thing, and it is even interesting as a startup, but certainly no path to making money. And any company that's liquid, public, and doesn't have any path towards making money, like the growth narratives, just have not survived, right? Like Shopify is another example that I like to point at, just because it's a business that I actually understand from the e-commerce space. 176 to 29, just that's 83%, and this is a real company that does make money. Now they may also lose money, but they make revenue.
Oh,
Like
so ugly, man.
it's so ugly. Look at that. It's like the degree of elevator down is impressive.
What does ARC look like? Is that any better?
No.
Remember Kathy Wood, the bull market savior, was like,
Yeah,
everything
ARC
is
looks
disinflationary.
What's incredible about ARC, if I can, there it is.
Oh.
Got my
Beautiful.
big boxes. So like that looks really bad. What's incredible about this though is they own a lot of Tesla, and of all things, crazy, like Tesla has held up all right. So if Tesla, I mean, look at that, Tesla looks fine.
What bear market?
Yeah. So if Tesla loses it, imagine what happens with ARC. That's your capitulatory moment there for ARC, where, I mean, people have been piling into ARC too. Like, I don't think they've had the massive, redemptions out of their funds that you would expect. I think people pretty much bought all the way down. I don't know what it's been like, since the bottom ish, but yeah, like, so this is, you could make an argument for some capitulation amongst growth. The big thing I've seen this week, which I love, is a bunch of people talking about these like RSI trend reversals. So there's some, thoughts about perhaps momentum has shifted. NASDAQ hit the 200 week. I was talking about that being an important target. Historically, 2018, 2020, 2015, that was the buy it all moment. It has been ever since the market bottomed in 2010. So alongside a divergence, or whatever you want to point to, listen, you can make a case against tech all day. You can do it all day. Fundamentally, it is a better place to buy now than it was higher. Like, I don't know what to say. That you can make arguments for this being the bottom. Like, there's a lot of sentiment stuff in the air that screams that these could finally be approaching a bottom. My problem is I don't think that they're going to outpace to the upside things that have healthier balance sheets in a world where inflation is very, very real. But anyway, there's a lot of interesting stuff out there. I know I just kind of ran through all kinds of things, but yeah, what do y'all think?
Yeah, I mean, for me, just TA-wise, the S&P is at support. NASDAQ is somewhat, so doesn't really make, I think at this point, doesn't really make much sense to be bearish anymore. Made much more sense higher up. And I think this bounce was pretty telegraphed on where it would stop. So like for me, the S&P was pretty clear on the monthly anyway, high time frame wise. Went from support to resistance, got rejected by resistance, went all the way back to support, right? Like that kind of thing, like this support into resistance thing, into getting full rejected back into support. It's kind of like, this is what we've been talking about, right? Do you remember, Ledger? Like on this show, we talked about like maybe ranging in this area for quite a while. Well, now we're back at the range low. Obviously not nice that it happened like 2 months after hitting support, basically. This is always bad, right? When you have like a support like get hit, you get a nice reaction and you immediately come back. It's not a good look, but still support, right? So for me, I mean, considering how everything looks, and I mean, I do agree everything looks like shit, but I mean, it doesn't really make much sense to be too bearish, I think. And that's just kind of how I think about the market. Like I look at the S&P and I'm like, okay, there's that support, so I'm gonna be more bullish on the other things. And then with the Dixie as well, right? If you look on the higher time frames, it's kind of running into resistance now, which is the first serious resistance, I think.
Ooh, I like that hidden resistance, kind of the bottom of the previous block. Like everybody's pointing to 120, but there was that quarterly close. Is that what you're looking at? Quarterly chart?
Yeah.
113, 114.
Yeah, just a pre-breakdown consolidation, right? Sort of range high
exactly.
area-ish. And I still think like it's a trader's market for the most part, where if you're looking for like swings and all that type of stuff, you're probably going to have a hard time. Liquidity conditions aren't great. And the 50 IQ take is that the Fed keeps tightening and they keep using the word pain and fading that has been painful. It's about as straightforward as it gets. You don't want to be on the wrong side of those flows. And so if you've been operating kind of on a mercenary basis, where you take your bias from like the S&P and the NASDAQ, which have been trading very technically, and you express that bias intra-week by buying strong crypto coins and selling them to people who FOMO at the top of the range, it's been pretty good. And I think that's going to be the name of the game, at least for the foreseeable future, because I don't, especially with the merge in the sort of periphery, I don't see any big sort of swing trade narratives emerging in the near future. I really think it's a trader's market where you kind of look at risk indices. If you think they look bouncier at support, you might punt, intra-week risk on crypto. But aside from that, I don't know. Everything else looks a bit droopy and droppy. I think Bitcoin had its lowest weekly close as well in the past week that it had within this consolidation. So the signs of demand, I mean, there's clearly value sort of buyers willing to absorb sort of 18 to 20K, but that has to move somewhere, because if it gets stuck there, it doesn't look good.
Bitcoin's literally the bounce meme, like throw it on
6K all over again type of thing. But that's the thing, right? The argument has been stocks nuked really hard into that monthly level and crypto held up. And the interpretation of that has been, or one of the interpretations has been, that that's a sign of relative strength, which is reasonable. The only issue is that argument has been wrong most other times, and it hasn't been a case of relative strength. It's just been a case of sort of lag, right? And even you have this weird relationship where stocks nuke, crypto holds up, and then stocks look okay later in the week, and then crypto just starts nuking on its own. So it's more, I think it's more, a lot of the time it's been more of a sort of inefficient markets type of price action, more so than relative strength. But I mean, it's obvious looking at the chart, we had like 15 red weeks, and the red weeks more or less started churning at 20K. So it's no secret that there's sort of value buying and stuff going on there. It just needs to get out of this range, because the longer it spends here, the more it is literally a 6K analog in my mind.
One other legacy chart that we've pointed out a lot, but I just want to point out again, that 30-year yield, man. That's hard to ignore that, right? It's a 1988 trend line.
I remember when it was formed. Yeah.
It's pretty brutal, and it's the same type of thing on the 10-year.
Yeah.
The 2 years, like, I don't even know what to make of this. It's some kind of, I don't even know.
BitMEX, sponsored by BitMEX.
Yeah. So,
but that's like a serious point, right? A lot of the stuff we've looked at with the dollar and the bond market, etc., and FX as well, these things have broken out from multi-year ranges, right? And that's a signal worth taking seriously. Any kind of, if we look back at our trading experience, generally speaking, the longer the consolidation, the bigger the move. And the longer, once it does break out, if it was a long consolidation, you don't want to fade that too early. And I agree that structurally it's getting to some, especially the dollar and other stuff, getting to some interesting spots, resistances, and so on and so forth. But like trend-wise and momentum-wise, once these multi-year ranges break, you've got to at least give it some breathing room if you don't want to get run over. But short-term, intra-week, the stuff is at like support range lows type of things. If you're like Don will tell you with his Cosmos trade, if you want to poke at crypto stuff that's strong, while equities are at support, that's fine. And I think overall, structurally, that's pretty much the only trading game in town,
I think you could even make a case for like Q4 being a bit of recovery, because otherwise I think I saw Charlie, whatever his face is, that likes to do rankings charts. This is like the 5th worst year of all time so far.
Okay.
Yeah. So you could just have a kind of recovery of something like that for the entire Q4, so that this becomes, I don't know, the 12th worst year of all time.
Let's go.
But that's the kind of thing that can really get people off sides if they finally are capitulating, finally selling, and then they get chopped up, and then they, 2023 is not much better, and that's how people get rid of their money, is they hand it to the market participants that fade them.
I mean, do you guys remember like the COVID crash and how like everything just went to like basically zero, or sometimes even below? It kind of
Oh, yeah.
does feel like in like, for example, like the charts, like the 30-year that you showed earlier, kind of looks like the inverse of that, right? Where it goes completely crazy. Pretty much the same thing. I could see that be kind of like you get like these undershoots, overshoots kind of things where it's too crazy on the downside and too crazy on the upside. And I think it's getting really, really crazy. It's the same with the dollar strength. It's getting into these kind of levels where it's getting really, really crazy, I think. And at that point, I think at some point you have to fade it. It's just a question of when. And then it's going to slingshot back. And then probably like the trend might still come back. Like with the dollar, for example, you look at it and it goes like, for example, the Dixie right now. If you look at it, it's going completely crazy, right? This is parabolic. And at some point that's going to break and then it's going to pull back. And the question is this going to be something where you get the COVID lows on, like, for example, the S&P, how it looked like, right? Where you have like this sharp sell-off and then a big bounce into like a complete reversal? Or do you have just like a sharp sell-off and then the trend continues? But I would not feel too comfortable trading this on the long side anymore. And I talked about this on this show like a couple of times where I'm like, okay, it's broken out. I wouldn't fade it. At some point, it makes sense to fade it. I'm not there yet, but I think it's getting really close. It's too, like, at some point, it gets too extended anyway. It's not really my market, though, so it doesn't really matter too much.
And it could spend a long time in a bullish mean reversion, kind of like what we've seen in oil, to be honest. But this level of hype towards dollar strength was what people were doing at 120 oil, and now oil's at 78.
Yeah.
And I'm actually really bullish on oil markets. Like, I think that this is a technical, fear of recession type of mean reversion, but the fundamentals of the energy markets should make one to be relatively biased towards long oil. And that doesn't stop it from going sub 80 because the trade got well overextended. You could see something like that from the dollar and give people an exit opportunity, a parachute for their tech and risk on assets. Of course, that by the time that those are topping is when they'll finally believe.
That's how
Including
stuff
myself.
is starting to break, right? Like, stuff is starting to break. If you look at the yen and there's central bank intervention in that market, if you look at the British pound, that stuff is starting to break there as well, with mulling of emergency rate hikes. Dollar strength is putting a bunch of pressure on basically everything. Economy. The likelihood of China reinflating everything and keeping stuff afloat all over again is like fairly low. So we're starting to see the kind of technical parabola in the dollar have real kind of downstream implications to even mainstream currencies, G8, whatever, which are trading like shit coins. So yeah, we're sort of getting there in one form or another because the ordinary flow of things has been sort of interrupted, and it's almost like a micro, crypto is like a microcosm of that. Like, when the price action gets really kooky, stuff starts to break and exchanges go offline, you can't reach APIs, downtime, maintenance, order submission error, etc. It's funny, we're seeing kind of the macro version of that, right? Like, the dollar strength is just breaking all these currencies, and central banks are being forced to act in very, very unusual ways.
So if let's just assume that there's room for mean reversion and macro fear, and that gives crypto a leg. Where do you deploy into that? Like, do you think Bitcoin is going to have a dominance run and do all right, or would you play the merge, the actual reduction in supply being a thing, or do you just go straight to the bottom of the risk pool and buy whatever altcoins?
Just get the most illiquid shit coins for the best prices you can, and hope you get a good wick.
Is that the play?
I think Don's got an actually good answer to this as far as relative strength goes, because he's been punting this thing.
I mean, you just buy whatever's strong. That's just how it is. As stupid as it sounds, right? I mean, that's what I've been doing. Like, I bought XRP because it was strong. It went up like 30%. I bought Atom because it was strong. It went up pretty much immediately. I think that's still the play, and it's going to be the play. But if crypto gets like a leg up, I think it's probably going to be first felt in Bitcoin, besides the ones that are actually showing strength, right? So I could see a world in which coins that haven't been showing strength. Like I'm looking at like EOS or like other like older coins that have.
You're
had,
the only
like,
person
EOS.
I know that still talks about EOS.
I
gotta
it's
go.
just.
I gotta go find it. I gotta go
Donald
find.
holding EOS, ICX, Neo, IOTA. What else
I'm
is
not.
there?
I'm not holding any of
Eng.
these for exactly the reason I'm going to outline, which is basically like they're running out of narrative, right? EOS had a narrative, that's why it went up, but now there's none, right? And those kind of coins I could see stay, like even if crypto gets like an influx of money, I could see them stay kind of like equal on the USD pairing, as in like get shit on the Bitcoin pair, even if crypto like gets some inflows, and you just have them go sideways and you have pain that way. But I think in general, and this is something that we've been seeing in the last 2 years, it doesn't really make much sense to fade strength in crypto, right? So like back in the day, back when we like when the market was like a little bit newer, you always had this, okay, either Bitcoin rallies or altcoin rallies, you don't really have them run together, or like at least there was some relationship between the two. Nowadays, it's like, okay, you have a narrative for ETH coming in like a couple of years, and then you have ETH BTC going like a crazy run in like a Bitcoin-centric market, and ETH completely outperforms Bitcoin the entire way up. And I still think that's going to be the case now, where you have like a couple of coins. If Bitcoin goes up, I'm not even guaranteeing that because it looks like shit. But if Bitcoin goes up, I could see like these handful of coins, like 10, 15, that have a narrative just completely blow Bitcoin out of the water, and everything else just kind of struggles. And like people FOMO into those 10 coins, that makes them go up even more. And yeah, so there's going to be better choices than Bitcoin, I think. The safe choice, obviously, Bitcoin when you want to position for like upside, but it's been pretty meh, honestly, in the last couple of years. And I don't think that trend is gonna change too much.
I mean, that's the right answer, right? As far as the question goes, if you think there's going to be a larger reversion, what do you buy? You can be, there's like a spectrum there. If you're conservative, you buy BTC and ETH because they're the biggest, most liquid, have the best levels, you can get out and so on and so forth. If you're a bit more of a degen, you either look at the most relative strength in altcoins across either USD, BTC, ETH pairs or whatever, or you chase a catalyst. If you know there's some sort of narrative coming up, some sort of news, and you're hoping for a bit of a pop there as the time frames align, you do that. And wherever you find yourself, or whatever combination of those two things, that's pretty much how you play it. For me, it usually ends up being BTC and ETH because I'm a boomer. But in this market where there's kind of no passive bid and no real dispersion and so on and so forth, it's mostly been, I think Don was tweeting about this as well, kind of if you've been able to pick out the single names that have been doing well, because that's such an exception, sort of ironically, the capital concentration around those same few coins has been quite high, and they've sort of been the only / best trades available. And it sort of almost makes it easier to pick when the market's so weak. Something strong really stands out like a sore thumb, as opposed to looking at your watch list and seeing everything up between 10 and 30%. How are you supposed to pick the quote unquote right one?
Don, I talked about Atom a little bit while you were out, but I know you bought it. Do you want to give your case for Atom? Because it certainly is standing out with relative strength.
His case is that he bought it.
Yeah. I mean,
but he bought it. He bought it. He had a Y.
I think you gave him too much credit there, Ledger.
So I bought it right into resistance, which is nice, right on the Bitcoin pair, but we'll talk about that in a second. So in general, right? So I bought Atom the first time, basically, like it broke down. I saw that, I mean, you see this relatives, like this was basically while everything else was like not doing too well, right? So we had like Atom bounce strongly from support. You can see the support on the weekly, bounced from support, just run all the way up, and then kind of retested the support I wanted to see retested. I was on my road trip back then, so I was like, I wanted to enter anyway, but I couldn't find anything, and then we got this massive candle to the upside. As in, like, I couldn't buy here, and then I was like in this middle thing, and I was like, what the fuck do I do now? And then we had like a little bit of a pullback into pretty much these highs, and I bought that, which turned out to be quite a nice buy because like just 2 or 3 days later, it just completely catapulted upwards. And then I sold, right? I was like, I think with the ETH merge being so close, doesn't really make much sense to hold this trade. So I like had it from like around 12 a little bit, like around that area. and I sold it into like 16-ish. And I was like, this is still like, nothing's changed, right? This is still relatively strong to everything else. So if I want to buy something, I want to buy Atom. It's just, I don't want to hold anything right now. And that was for the last 2 weeks, basically, was the merge thing, where ETH went from 1,750 or something, or like 1,800 or something, all the way back down to where it is now, like 1,200, 1,300. Atom did the same kind of thing from 17 all the way down to 12. And yeah, I saw it kind of hold support-ish. And it was just like, okay, this is an interesting area. I want to be involved. So I just bought it back. It's basically just because it's outperforming everything else whenever stuff goes up. And I just wanted a piece of it. And it's been good so far. Like, it's one of the only coins that is performing well today. It's one of the few coins that did okay yesterday. So I'm not really complaining. It's all about the relative strength right now.
I mean, it looks like somebody's been just gobbling it up. In the chat, and this has been talked about before, I guess along with their conference, they're doing Atom 2.0 tokenomics updates. So maybe they're going to burn coins.
I mean, Don is the guest speaker, given the size of his bags. So I look forward to his keynote speech.
I've been wanting exposure to Atom. I've been seeing the same relative strength, wanting exposure, and either the dips weren't convincing enough, like they were relatively small, which should just be a reason to buy, or like hadn't gotten, really the affirmation of a breakout. It's just been a tough one to enter when you have these kind of like straight line channel things. I always feel like by the time I actually do it, it's going to be the turbo top, and I'm going to get.
We were fudding it, weren't we, Ledger? We were like, oh, this looks like the staircase up,
$10,
elevator down, but looks like the elevator's out for maintenance, and it's just staircase for the time being.
Yeah.
Don, are you going to dump on the conference attendees?
No.
While they're chilling at some booth, and then you're just hitting market sell on every exchange.
I mean, if they're going to pump it to 22, sure. 22. I don't think that's going to happen. But I think like with this kind of structure, it either goes and starts breaking down here, in which case I would close. But it's still like I made quite a bunch of money from like the 12 to 16-ish trade, like 16 point something. That I'm more than willing to risk some of that to kind of take this leg. Like I want to see it go parabolic into 22. And I think
if this goes to 22, I would be in full cope mode over watching the entire move up and not catching any of
it. Which makes me think it's going to happen.
I don't disagree with you.
Tom is adding right now on this.
But yeah, like I just think in general, and I mean, I have like a few reasons why I think like Bitcoin is going to hold here at least for some time. If Bitcoin holds, this is going to go up, right? If Bitcoin breaks down, this is obviously going to break down. So it's like, it's this thing that kind of relies on Bitcoin, but it doesn't rely on Bitcoin to go up. It relies on Bitcoin just to do nothing or go up. Like both of them work. The only thing obviously bad for this trade would be Bitcoin breaking down, and with the S&P, like I talked about earlier, being at support, with the dollar index being like somewhat at resistance, and with Bitcoin and ETH being at support. Like I didn't talk about this earlier, but we're still in weekly support, right? And we're still at cycle high. Obviously still looks complete garbage, but I think this could hold for a while, right? Like I'm not even saying like, sorry, go ahead.
That grind on the 2017 high too. It's just so clean. Where all that is, all that congestion there.
Yeah, we're kind of just stuck in that area. And I mean, I think when you have a level like this, it's going to be painful. Even if it wants to break, it's going to be painful and it's going to be grindy and we're going to be stuck there, right? I talked about this the last time I was on the show, which is too long ago. That like, I don't know if you guys remember, but I was like, I could see us like just go sideways in here. And yeah, I
that's like 6K confirmed price action,
it's the exact same
like
thing.
6 months here. It's like
could easily be. I mean, I wouldn't be surprised if we got the same thing actually. Like grind here, break down towards like 13, 14, 15K, completely shoot back up, or like even have it like a little bit longer, going into like 23 or 24. I would be surprised.
Bottom in like January, February 23.
Yeah, maybe. So like I wouldn't mind this at all, but I think it's gonna before 20, like or like the cycle highs anyway, like that area breaks. I think we're gonna need some more time. Could be completely wrong on that. There's a reason why I don't trade Bitcoin right now, because I think even if you get like if I buy here and it goes to 20K, I mean, what kind of gain is that? It's like there's nothing there.
The handsome living in this market.
Yeah, it's like you get like a 1 or 2%, you're very happy, and then you look at the altcoins, and I mean, Atom is up like 6% on the day. It's up from the bottom, right? Like you look at Bitcoin and it's up. We can look at this really quick. Like Atom's up 170%, was up like 200, and you look at Bitcoin and it's up 9%, and at the highest point was 45. That's just laughable in comparison. So there's not really that much to do here. I'd much rather spend my time trading the Ponzi's, and I'll continue doing that until I think this is going to break down or break out. If it starts like looking like it wants to break out, I might actually convert my altcoins back into Bitcoin just to make sure at least some of it, right? You don't want to be all in like a Bitcoin sun run where it just goes completely crazy. I don't think that's going to happen anytime soon. But if my mind, like if I change my mind on that, I'm not going to be going into it just in altcoins, because I've seen it too often where like Bitcoin goes on a run and the altcoins don't go with, and I'm just sitting there coping that I'm not going to fall for that. But right now it doesn't look like it. So I'm just trading the altcoins whenever I see a narrative, and then when I don't anymore, I just dump them and look for the next one.
Are there any other alts? I'm looking at Solana a good bit right now. I think there's some interesting stuff with Solana to me, and I don't know how y'all feel about it, but it's not fully down to the bottom of the range that we've talked about a lot on this show, but it should have some potential for relative strength. I feel like back up to that 50-ish territory if the scenario plays out that we've been talking through. So it just gives me this, some clean numbers, 30 something to 50 something. There's a 60-70% move there, and I think one of the things that's attractive is if you can catch the trend correctly, and you're looking at like 10 and 15% moves on Bitcoin, but it might be a 50% plus move on an altcoin with some liquidity like Solana or Atom have. Maybe these are worth punting.
Do you want to see some terrible, low quality, low effort FUD for Solana?
I'd love it.
Here we go. I'm screen sharing.
Oh yeah, it looks atrocious on these.
So this is the monthly time frame, right? My day trading scalping time frame, obviously. And then if we look at this pre-bull run consolidation and treat it like a cluster with the highest close and the lowest close being the key levels, here's my FUD. I just drew a random line on the chart from the lowest close of the kind of the range low of this consolidation. Support, monthly engulf and close below. And this kind of looks like a retesty area to me in the kind of low to mid 30s. I don't know where it goes if this kind of breakdown sticks. I guess your first target would have to be the lows here at around sort of sub 2019, and anything below that gets pretty depressing. I think if you want to have a really constructive higher time frame view of this thing, this monthly cluster is probably going to matter a fair bit because it's just a good level and kind of visible on other time frames as well, and just an important consolidation. It was, I mean, look at the like it's a really good level. You can see on the monthly candles, right, in terms of support resistance, and the current evidence suggests that it's between your 30 and 40 range is resistance. And I think the weekly time frame gives a particularly different image of that. The first area where I'd be open-minded to doing business on the weekly for, like, again, an intra-week, short-term trading bounce, whatever, is actually the lowest close of this weekly super bearish candle in the mid-20s. When Dom was Pico buying the bottom here, I was salty because I wanted to buy this lowest close and I didn't get it. I think if this monthly resistance does something and you get a puke from there below sort of Don's Pico bottom entry and into this kind of weekly range low, that might be puntable, right? And even then, if you get a reversion from one level to the next, like this leg you were talking about, Ledger, like that on its own, just kind of back of the napkin maths, there's like 30 to 70% available there on a very structurally conservative trade from support to resistance. So monthly looks garbage. Weekly, if it hits the range low, I might punt it. I actually want to just own Solana in general. as far as kind of crypto cycle, whatever stuff goes. I mean, maybe it doesn't do early on as well as whatever new layer 1 casino fresh chart roulette Ponzi we come up with.
Because EOS.
Yeah, because EOS, your Aptos, Sui, blockchain, whatever type of stuff is, fresh chart, no bag holders, new narratives, etc. Probably going to do well. But I think, if we're talking cyclically, there's a chance that Solana ends up being, or at least vies for the kind of retail chain reputationally, kind of like the Cardano, except it actually does stuff and works. You've got the Solana phone, and NFTs seem to have some sort of friction on this chain. The hackathons, the dev community isn't a complete ghost town. People appear to give a shit. So as far as kind of, if you're making cyclical entries, what do you want to own? For me, it's basically like BTC, ETH, Solana, BNB, maybe some FTT as well. It's not necessarily in that order, but something like that. I think as far as layer 1 horses go, I'm certainly interested on a much higher time frame of giving this thing another twirl.
Do y'all give any credit to the argument that this cycle ETH is pulling a Bitcoin and Solana is pulling an ETH? Have y'all heard that at all?
I have.
Actually.
Seems a bit projection-y, but
it is. But so a 90, just kind of a percent decline type of concept, and like where it stops, what history it has. Solana, if it goes the ETH equivalent downside, 95% would be like $12. Which would be a bottom absolutely in no man's land, which is the same thing that happened to ETH in 2018-19. And then ETH right now is right at the 200-week moving average, and it has a potential for what 80-85% drawdown would be in that 700 to 800 realm. I don't know if I've showed y'all the 200-week moving average yet today, but it's a tradition on this show. And yeah, I don't know. I just think that that's an interesting concept as the belief in the developer network for Solana increases. One of my friends was saying how someone else from the Solana ecosystem told them that there were more Solana devs than ETH devs now. I don't know if y'all have heard that, but I find that interesting. So they got to hang their hat on something, like, we're building, we've got this huge network and ecosystem and all this stuff. That's what makes us not EOS. And yeah, I think that there's some potential there, I guess. But it's really, really hard to look at this chart and get excited about a long-term trade.
I think actually, like, there's like I have like a few trade ideas around Solana. Like maybe not long term, but like quite a bit. One is like Cred said, basically down in this box again, or like at the bottom of the box, preferably. But the other one is basically just a momentum trade. If you can kind of climb back up above this red weekly candle, I think there's a good chance it actually goes all the way back to range high. And given it's tested that range high again, you actually get the nice two-leg move higher. So I think there's actually like there's a trade to be had there, which is like not the shortest time frame trade. Obviously wouldn't want to hold it above 100, but that kind of trade would be interesting to me. So
Don,
that's
you're just
something
upset that your 3AC gap on Bitcoin didn't fill. So now you're looking at these big gaps by the cascading weeklies left on other charts. Like, can you fill this one, please? Like, it's fine. I'll give you Bitcoin, but give me something else.
That would feel very 2019 if it happened.
Yeah.
You remember there was a March, April 2019 that was very, very aggressive for altcoins that made you believe, and then wrecked your soul. After that,
there was like this kind of thing where you have like oftentimes these charts all played out like this, right, where they went like this, and then you had like this was the high time frame stuff, and in the low time frames you had like the same thing, just like further spaced out, as in like you basically had this also, but then you had like this crash down and then retest at some point where people actually started believing again, which would be this. Like have this move to the upside, have this retest, and then on the lower time frames go to like almost zero, come back up, and then just dump. I wouldn't be surprised at all. But yeah, I need to see some strength in Solana relative to everything else. I'm legitimately just become the relative strength trader, which has been doing absolute wonders.
It's good. It's a good strategy.
Yeah.
I think you
I'm
knocked
just-
in an important point though. Like the magnet, what's made a lot of this market very difficult is because just everything collapsed and there's a credit crunch and a liquidity crisis. A lot of these lower highs have really been lower highs. You know, they haven't come anywhere close to giving a gracious exit that many people would want. Like, you know, looking at that Solana chart eyeball, that, you know, a nice lower high, or at least another attempt, would have been closer to that 80-90 handle. You only got like one shot post breakdown, like where your red box, your red lines are, and that's it. From then on, it was like 11, 12 red weeks. Same for BTC. You haven't had your 30k or even 38k, whatever type of retest for a lower high. It just kind of hit 20 and got stuck. ETH was slightly better because of the merge, and it made its way to about 2k, but it didn't make it to any kind of monthly levels of resistance yet. So maybe that's still on the cards, like a big sort of larger reversion. Maybe that's when we get our kind of dollar scenario and some sense of pivot, etc. We get kind of macro lower highs. But I think thus far, what's made this bear market in its own unique way difficult is the fact that, you know, just the one-sidedness of the flow and the price action, and those weekly charts kind of say it better than I could.
Man,
Yeah.
But no one's going to sell them anyway, right? If we get those rallies, as Ledger said, that's the kind of stuff that makes you believe, and that makes you think it's bottom, then you're entering a new trend, etc. I'd actually be quite willing to buy into those rallies if they happen much later. I think if they happen, like the sooner they happen, the more kind of bearish I'll be, which is a kind of weird premise. But purely from like a time point of view, I'd really want those higher time frame breakouts and reclaims, etc., to happen much later rather than earlier. I think the sooner they happen, the more I'll skew towards it being counter trend. If it happens much later, after more pain, more consolidation, whatever, I'll be much more optimistic as far as the price action goes. So time does have like an influence on price action, for me at least.
I do think these rallies will be quite capped. Like thinking, and very few people probably think, hey, yeah, Solana new all-time high soon. You know, I think you have the potential to rally as people fade the early part of the rally. To your point, Cred, people try to fade the early part of the rally, therefore it goes farther, and then it gets, you know, they capitulate the short side, or they believe in the long side as it hits 80, 90, 100, and then that's when the hammer comes down. Especially as you have longer term participants who are happy to sell you their $100 Solana to you. Yeah. And there's still quite a lot of those people, the unlockers and all that, you know, who can't be bothered to sell this cheap, but would be pleased to do so with triple digit Solana.
Yeah.
Just upset that 20k is resistance now. It's like you look at a chart, and at least intra-week, 20k is like a good sort of daily and weekly level of resistance.
Yeah, I mean, forever I talk about the 200-week moving average, and it's like the eternal buy signal, and now we're just hovering below it. It's just
what's this bearish crossover that I see brewing on your chart? It looks bearish.
Yeah, it is. It's very bearish. It's so that's actually the 20-week and the 200-week.
Has that ever happened before? No. I know we're curve fitting here, and it's complete hindsight nonsense.
Love curve fitting though. Let's do it. The 2015 bear market, it got very close. They almost kissed.
And now we did it. And
then we just we grinded across the 200-week, never quite crossed the 20 and the 200. The 2019 bear market didn't quite cross. Here we go. We crossed. You know,
this time it's different.
Yeah. Well, you know, what you transfer this to, Cred, which is always my favorite, is now when you get the reclaim, that's very, very bullish. So I'll ignore the bearishness of the current environment.
It's actually high quality cope. Like Don and I have discussed this before, that when you get really like high time frame or really slow moving average crossovers, a lot of the time that acts as an oversold signal, right? Simply because of how long it takes and the type of price action it takes for those crossovers to happen. But yeah, it's obviously not the best thing in the world. For me, it was also curious to observe how much, like, the arc of sort of narrative relevance that the 200-week moving average has had for Bitcoin. Like on the way down, it was the only thing that mattered, right? When we were kind of approaching 20k, it was like, oh, 200-week moving average. And even on this show, we kind of looked at it every week, which we still do because we adhere to tradition. But in general, like in the Twitterverse and the cryptoverse, it was like, oh, 200-week moving average bottom. And then now that we've spent 2 months below it, I don't see anyone talking about it anywhere near.
Yeah,
which is understandable, but
it didn't help that the 200-week was like right smack dab in the middle of Three Arrows liquidation cascade, you know. So their liquidation forced the price from roughly 24 to 20k based on all the reporting and stuff done after the fact. And so you just, obliterated the level, there wasn't near enough willingness to buy on the return. So now you're just kind of stuck down here in no man's land. I put the 50 on here too. A lot of people love, especially on daily time frames, looking at the 50 and the 200. I'm probably a little unique in using the 20 and the 200, but I figure, especially, by the time the 50 and 200 do their thing, it's too late. So I like the idea of blending the same long moving average that everyone looks at, but blend it with a much faster moving average, especially when that other moving average is used in other tools. So the 20 week or 20 period moving average is also the Bollinger Band midline that's built off of. So anyway, yeah. So if it reclaims it, sure.
That's been the siren song of the downtrend. Like, if it reclaims Do Kwon 45K breakout, that's bullish. Okay, if it reclaims 30K, that's bullish. And we've kind of just been adjusting on the way down. I think you and I talked about this last week, Ledger, that reclaim patterns in general are actually they're the exception, not the rule in a trend. Right. Like in a trend, price generally follows delta. And, if sellers are being aggressive in a downtrend, they normally get their way and prices go lower. And a reclaim is like a sort of anomalous event, if you will, which is why it's makes for a unique setup. So I think when it does trigger, that'll be good. It just, nothing has been reclaimed yet.
Yeah, it's the same idea as for a pattern trader. If you say, well, if you have a continuation pattern, then the continuation has a measured move. But if you actually take the opposite move off that supposed continuation pattern, then it's a high velocity move in the other direction.
Yeah. Like the head and shoulders, when they're technically triggered on the break of the neckline, if that neckline break fails, then the pattern failure is a real thing.
That's where is it Caroline, the new CEO of Alameda?
Yeah, that was good. So the context there is, Caroline, the new CEO of Alameda Research, they asked her if they use any TA, and she said no, but the only way we would use TA is indirectly to kind of get a sense of what people who use TA are doing in the market or how they may be positioned. And I've got a good, whatever shill on my free video on my channel called Pattern Failure, which actually just looks into the logic of that you kind of counter trend TA, which is in the way still doing TA, but maybe in a kind of smarter way. So all your sort of deviations, failed breaks, pattern failure, I still think it's TA, just the kind of second order version.
Yeah, it's basically like, where are the middle curvers, like Ledger? where are their stops? And then let's go obliterate them, make them sell, and then we do the move.
Yes, something like that. Like, what construction or what price action would make them do something? And then what would invalidate them? And you kind of trade the invalidation of order herding, basically, which is fairly straightforward. I did want to answer this question very quickly, at least in a personal capacity. Michelle Molinar says, thoughts on Metaverse governance tokens for the coming months to end of year, like Mana, Polis, ILV, Sand. I'm still really bearish on that type of stuff, because for me, that was just like peak bull market froth narrative, where every token was going to have its own metaverse and land scarcity, and every NFT was going to build a video game in its roadmap and all that type of stuff. I think it's the most aggressively kind of frothy, speculative sector in crypto, the most far-fetched in terms of narratives actually hitting the market, finding product market fit, and so on and so forth. And I have no interest in aggressively positioning for those, especially as kind of builders discover what it means to build out some of these metaverses and games. I think narratively, that's some of the, those are on the part of the risk curve that I don't want to touch at this point, personally. I don't know what you guys think, but for me, it's kind of goes in the same basket as almost dog coins and other things.
Yeah, I think unfortunately it might be the type of thing where the starving artist goes back to being starving. They had a good run, 2021.
Yeah, I mean, it seems just stupid to me. When I look at the games that exist, like, what the fuck? Like, why are they valued this highly? Like, Mana, for example, I do not understand. It just boggles my mind every time. I do not understand how anyone can look at these games and be like, okay, yeah, this should be, like, priced higher. It's the same with, what was that streaming service called that existed? Tether, or I forgot, whatever.
Tether, the streaming service.
Not Tether, but it's the same. Like, it's with
streaming liquidations.
But there was like this altcoin basically that had like its own streaming service. People were like, this has a product, and then you look at it, and it's like 50 people watching one channel, and that's the entire thing.
Theta, there we go. Yeah.
Theta, yeah. I mean,
that was,
there you go.
What was the guy that he also was Doge to $3 guy? He was a
Oh, Tunes.
big Tunes. Tunes is a big data guy back in the
Yeah,
day.
and then 10 people use the platform, and it's like multi-million or like even billion like in that garbage. And you're like, what the fuck? How does this work? And I mean, it works in the bull market, and then the bull market comes to an end, and it all goes to zero, right? And some of the backholders will hate me for this, but I mean, just make something that's really, really cool and that people actually use, and then maybe it's different, but most of the time it's just not.
It's like it reminds me of Library in 2018. Like, oh, YouTube censorship, PewDiePie is gonna move over to this random shitcoin streaming service. Yeah, the stuff we come up with is really impressive, to be honest.
Well, maybe they should, but they don't because the market's not there.
Because they like money and stuff that works.
It's a fundamental devaluing of the network effects of existing platforms. Honestly, is what's happening there. We are streaming on YouTube right now because people use YouTube. You can not like it from a fundamental perspective, but people hate Twitter and use it all the time. People hate YouTube, or they call Google evil, or Apple's policies parasitic, but doesn't prevent them from using it. Those who gain network effects tend to keep them. So yeah, good luck trading this in Bitcoin. Should we leave it there?
We should.
Yeah. Thanks everybody for being here. We really appreciate you. It has been a pleasure. Keep having the fader down on the music. Thanks so much. Go to weeklyopen.com to check out episodes. Hit like on this video. We need that. We need your likes and your subscribes and all that. And then check out our partners over at FTX. Go to weeklyopen.com/FTX where you can trade today directly from one asset to the other. No fees or low fees. Trade different types of assets. I got everything you need. Check out FTX, weeklyopen.com/FTX. Thanks again for being here. We'll